What's up, investors? It's the Russian dude. And it looks like that the market is anticipating that the Federal Reserve will hold, most likely temporarily, any rate cuts, at least in the very beginning or even the first half of the next year, 2025. For example, the expectations, the probability of the next rate cut in January to 4.25 to 4.5% right now decreased to 91.4%. The chance that it will not happen, I mean. So as you can see, most likely with 9 out of 10 probability, 9 out of 10 experts saying that this cut in January will not happen. In addition to that, the whole prognosis of the entire 2025 in respect to the interest rates by the end of this year and throughout this year, as you can see on this graph, has changed as well. More and more investment organizations and Wall Street experts, they also see that the interest rates will not be as slow as originally planned. The expectation is that, yes, at this very moment, there will be maybe one, maximum at 2 of rate cuts planned for this year, when originally, if you remember, the Federal Reserve claimed that there might be 4 rate cuts in 2025. Well, now we are down to half that number, potentially even only one of them. This is obviously related first and foremost to the increasing inflation, re-accelerating inflation, the numbers that we are getting, both CPE, PCE, CPI, I mean, all these numbers, they show that the inflation started to creep once again up. And it does not matter if it is just a regular inflation or a core inflation, that the government always conveniently chooses between these two numbers which to show to the public. It does not matter. All of these numbers, they show that the inflation is either not budging, stays exactly the same, or even continues to go up. As you guys already know, this is the worst case scenario for the Federal Reserve, because its main responsibility is to keep this very fragile balance between interest rates and inflation. When the inflation goes up, interest rates should go up as well to tame the inflation. When the inflation goes down, they ease the interest rates to help the economy to continue existing, to resurrect the economy. Right now, they are reducing the interest rates when the inflation is already on the rise. There is a lag effect in these actions, in this activity, so even though they might hold the rate cuts for the next year, the previous rate cuts will boost the inflation, as we already speak. So whenever they might start to once again increase the interest rates, hike them once again, it might be a little bit too late, because the inflation will be on the rise already. It will be curious to see what Jerome Powell and his people will do in the first half of 2025, because yes, at this very moment, the expectations is that there will be only 1, maximum 2 rate cuts in the entire 2025. We're going to be very curious to see what is going to be the next inflation data, because once again, it was already increasing and they kept cutting the rates. So with very high probability, at least in my personal opinion, we might see an increased inflation in the next reports as well. This could be very, very bad news for the stock market and markets in general. But what do I know? These are just my predictions. Let me know down below in the comments if you agree with them, if it makes sense or not. And if you enjoyed today's episode, please like this video, subscribe to my channel. Thanks so much for watching, and see you next time.